Hello and welcome to a special presentation that will forever change how you see the economic system that governs our daily lives. Today, we're pulling back the curtain on how a small group of elites manipulate economic forces that affect every American family. Before we dive in, I want to know where you're watching from tonight. Drop a comment below telling me your city and state. And if you believe in honest journalism that asks the tough questions, hit that like button and subscribe. This is information they don't want circulated widely, so help me spread the word. What if I told you that the economic challenges you face daily, from the rising cost of groceries to the impossibility of buying a home, aren't random market forces or inevitable economic cycles? What if these hardships are the direct result of calculated decisions made by a powerful few? Tonight, we'll follow the money. We'll name names. We'll expose the coordinated effort to transform America's economy from a system that once created the greatest middle class in history to one that systematically transfers wealth from working Americans to a small, interconnected elite. This isn't conspiracy theory. This is simply connecting dots that are hiding in plain sight. The evidence is all around us in policy decisions, in financial regulations, in tax codes written by the very people who benefit most from them. By the end of this presentation, you'll understand why your dollars buy less each year, why your children can't afford to live in the neighborhoods they grew up in, and most importantly, who benefits from your economic struggle. Stay with me. The truth might make you uncomfortable, but understanding how the system actually works is the first step toward reclaiming your economic freedom. Let's start with the institution that has more control over your daily life than perhaps any other: the Federal Reserve. Most Americans think of the Fed as a government agency working for the public interest. But is it really? The Federal Reserve is technically a private banking cartel that controls the entire U.S. monetary system. It was created in 1913 during a secret meeting on Jekyll Island, attended by representatives of the wealthiest banking families in America and Europe. That's not speculation. It's historical fact that the architects themselves later admitted. This private institution has the extraordinary power to create U.S. currency out of thin air. Think about that. They don't need gold. They don't need anything of value. They simply decide that new money exists and suddenly it does. Through this monetary magic, they control interest rates, inflation, and effectively the value of every dollar in your pocket. When the Fed creates trillions of new dollars, as they've done repeatedly in recent years, they're not just adding numbers to a spreadsheet. They're diluting the value of every dollar you've worked for and saved. It's a hidden tax that you never voted for. Who benefits from this system? Follow the money. When the Fed creates new currency, where does it go first? To the largest banks and financial institutions, the same entities that own shares in the Federal Reserve itself. These institutions get access to this new money before its inflationary effects hit the economy. They can buy assets at pre-inflation prices, while you and I pay post-inflation prices for everyday goods. The banking elite understood long ago that controlling a nation's currency is far more powerful than controlling its laws. As Mayor Amschel Rothschild reportedly said, "Permit me to issue and control the money of a nation, and I care not who makes its laws." The Fed's decisions aren't made by elected officials accountable to voters. They're made behind closed doors by banking executives and economists with revolving door relationships to Wall Street. And these decisions determine whether your savings grow or shrink, whether businesses in your community can get loans, whether your children can afford college or a home. America once built things. We manufactured products, created genuine value, and in doing so, created the greatest middle class in human history. Today, our economy is dominated by financial engineering, moving money around rather than creating anything of real value. This transformation wasn't accidental. It was a deliberate restructuring of our economy that began in the 1980s and accelerated through the following decades. Financial deregulation, tax changes, and monetary policy all incentivized speculative financial activity over productive enterprise. Today, our brightest young minds don't dream of building companies that make useful products or solving real-world problems. They dream of working at hedge funds, private equity firms, or investment banks, places where they can make millions without creating anything tangible. This financialization has hollowed out American communities. Just look at what happens when private equity firms acquire companies. They typically load them with debt, extract whatever value they can, then discard the empty shell, often through bankruptcy. Workers lose jobs, communities lose tax base, suppliers lose customers. But the financial engineers walk away with millions. Meanwhile, policies crafted by financial industry lobbyists make it increasingly difficult for small businesses to compete. The local hardware store can't compete with a multinational corporation that pays effectively zero taxes through sophisticated offshore structures. The community bank can't compete with financial giants that have implicit government guarantees. Wall Street celebrates when companies announce mass layoffs. Stock prices rise on news that would devastate any normal community. This perverse incentive structure reveals whose interests the system truly serves. And what about corporate stock buybacks? Once considered market manipulation and made illegal after the 1929 crash, they were legalized in 1982. Now corporations spend trillions buying back their own stock, artificially inflating share prices and executive bonuses, rather than investing in research, equipment, or higher wages for workers. This isn't capitalism in any meaningful sense. It's a rigged system where financial engineers extract wealth from productive enterprises until nothing remains but debt and unemployment. And it's all perfectly legal because the same people who profit from these schemes help write the rules. Globalization will lift all boats. That's what they told us. But whose boats actually rose? Not the American middle class. While a small elite class has grown fantastically wealthy, tens of millions of American workers have seen their jobs shipped overseas, their wages stagnate, and their communities collapse. This wasn't some inevitable economic evolution. It was a policy choice, one made not by voters but by a bipartisan consensus among political and corporate elites who stood to benefit enormously from this arrangement. Trade deals like NAFTA weren't primarily about free trade. They were about creating a regulatory framework that allowed corporations to move production to countries with lower wages, fewer environmental protections, and virtually no worker rights, while still selling products back to American consumers without tariffs or restrictions. The math was simple. Pay a worker $30 an hour in Michigan with benefits and safety regulations, or pay a worker $3 a day in a country with no environmental or labor standards. Corporate profits soared, executive compensation exploded, and Wall Street celebrated. Meanwhile, America's manufacturing regions transformed into the Rust Belt, a testament to abandoned factories and broken promises. Who lost? The American worker, certainly, but also American national security. We've become dependent on foreign nations, some outright hostile to our interests, for essential goods. During the pandemic, we couldn't even produce basic medical supplies because that production had been outsourced years ago. The elites who promoted globalization knew there would be winners and losers. They just never mentioned that they would be the winners, and you would be the losers. They promised job retraining and new opportunities for displaced workers, but those programs were underfunded afterthoughts, not serious commitments. Even now, as the catastrophic consequences of these policies become increasingly obvious, the same elites lecture Americans about learning to code or moving to find work, as if abandoning their communities, extended families, and everything they've known is a small price to pay for the efficiencies of globalization. The truth is that globalization as implemented wasn't about economic efficiency. It was about shifting power from labor to capital, from democracy to unaccountable corporate governance, from national sovereignty to transnational institutions dominated by, or you guessed it, the same financial elite. The American dream once meant that ordinary people could afford a home, raise a family, and provide their children with opportunities for advancement. Two pillars of that dream, affordable housing and education, have been systematically corrupted by the financial elite. Let's start with housing. In many parts of America, the simple dream of homeownership has become a fantasy for young families. But why? Is there a shortage of land in America? Of building materials? Of construction workers? No. What we have is a deliberately engineered housing shortage created through restrictive zoning laws, financial speculation, and increasingly corporate ownership of residential real estate. Private equity firms and institutional investors are buying up single-family homes across America, outbidding individual families and converting what should be vehicles for middle-class wealth building into rental properties. These corporate landlords then raise rents aggressively, extract maximum profits through minimal maintenance, and use sophisticated software to quickly evict tenants who fall behind, often after unexpected rent increases, all while benefiting from tax advantages that individual homeowners don't receive. Meanwhile, in cities where housing is most expensive, development restrictions often championed by wealthy homeowners prevent new construction that would increase supply and reduce prices. The same elites who speak publicly about affordable housing fight vigorously against building it in their own neighborhoods. As for education, it's become a debt trap. Total student loan debt now exceeds $1.7 trillion. Young Americans start their adult lives owing more than previous generations paid for their houses. The beneficiaries? Universities with multi-billion-dollar endowments that still raise tuition annually, and financial institutions that profit from servicing this non-dischargeable debt. Education isn't just about college. Public K-12 education has been systematically undermined through underfunding, privatization schemes, and standardized testing regimes that serve corporate interests rather than children's development. The wealthy send their children to private schools while supporting policies that drain resources from public education. This two-tier system, quality education for the elite, underfunded schools for everyone else, reinforces inequality across generations. It's not a bug in the system, it's a feature. When education becomes a luxury good rather than a public good, social mobility dies. The destruction of affordable housing and education isn't just an economic tragedy. It's a direct assault on family formation. Young people delay marriage and children because they can't afford homes. They postpone starting families because of student debt. The result is demographic decline that threatens the very future of our nation. The tax code is a 70,000-page love letter to special interests. That statement captures a fundamental truth about how our economic system is rigged against ordinary Americans. The wealthy don't just have more money than you, they play by an entirely different set of rules. Consider this: when you earn a paycheck, taxes are automatically withheld. You pay full freight on Social Security and Medicare taxes. Your income is fully transparent to the government. But for the wealthy, particularly those who make their money through investments rather than labor, the system works differently. Capital gains are taxed at lower rates than earned income. Why should money made from money be taxed less than money made from actual work? The carried interest loophole allows hedge fund managers to classify their income as capital gains rather than ordinary income, slashing their tax rates. Offshore tax havens and complex trust arrangements allow the ultra-wealthy to shield trillions from taxation altogether. Major corporations with billions in profits often pay zero federal income tax, or even receive refunds, thanks to sophisticated tax avoidance strategies. Meanwhile, your local bakery or hardware store pays the full corporate rate. Is it any wonder small businesses struggle to compete? The IRS audits working class and middle class taxpayers at higher rates than the wealthy. Why? Because it's easier and cheaper than taking on the armies of lawyers and accountants employed by the ultra-rich. The agency has been deliberately underfunded to prevent effective enforcement against sophisticated tax avoidance. Property taxes, sales taxes, and payroll taxes, which fall disproportionately on working Americans, have increased while taxes on inheritance, corporate profits, and financial transactions have been cut or eliminated. The result? A tax system that takes a larger percentage from teachers and truck drivers than from hedge fund billionaires. When politicians talk about tax reform, they almost always mean changes that benefit their donors. The 2017 tax cuts provided temporary, modest benefits to the middle class that expire over time, while permanently slashing corporate tax rates and providing new loopholes for pass-through businesses commonly used by wealthy investors. And when deficit concerns arise inevitably after tax cuts for the wealthy, the same politicians who crafted those cuts suddenly discover fiscal responsibility and target Social Security, Medicare, and other programs that benefit ordinary Americans. This isn't just about money, it's about dignity and fairness. A system where a nurse pays a higher tax rate than a private equity manager sends a clear message about whose work our society truly values. Americans once understood that concentrated economic power threatens liberty. That's why antitrust laws were created to prevent monopolies from crushing competition, exploiting workers and consumers, and ultimately endangering democracy itself. Today, we live in a new Gilded Age. A handful of corporations dominate virtually every sector of our economy. Just 4. Airlines control the majority of domestic air travel. 3 pharmacy benefit managers control 80% of prescription drug benefits. 5 tech giants have more market power than the robber barons of the early 20th century could have imagined. This concentration wasn't inevitable. It resulted from a deliberate abandonment of antitrust enforcement that began in the late 1970s and accelerated through subsequent decades. Regulators embraced a narrow view that focused almost exclusively on consumer prices rather than broader concerns about economic power, innovation, small business vitality, and democratic values. The consequences surround us. When a few grocery chains control food distribution, they can squeeze both farmers and consumers. When tech platforms monopolize digital commerce, they can extract rents from every transaction and manipulate what we see and buy. When pharmaceutical companies consolidate, they can raise drug prices beyond what any competitive market would allow. Worker pay has stagnated as labor markets have become more concentrated. When there are fewer employers competing for workers in a given industry or region, wages naturally fall. Studies show that corporate consolidation has depressed wages by as much as 15 to 25% in many sectors. Small businesses, once the backbone of American communities, struggle to survive against monopoly power. The local hardware store can't compete with a retail giant that demands special treatment from suppliers and local governments. The independent farmer can't negotiate fair prices when faced with monopolistic meat processors and seed suppliers. Even innovation suffers. Why invest in breakthrough technologies when acquiring potential competitors is cheaper and less risky? The same monopolists who claim to drive innovation often spend more on stock buybacks than research and development. Most troubling is the political power that flows from economic concentration. When companies grow large enough, they can effectively capture the regulatory bodies meant to oversee them, fund political campaigns on both sides of the aisle, and shape legislation to protect their dominance. This creates a feedback loop where economic power begets political power, which in turn reinforces economic power. The return of monopoly power represents a profound threat to American liberty. As Supreme Court Justice Louis Brandeis warned, "We can have democracy in this country, or we can have great wealth concentrated in the hands of a few, but we cannot have both." When the founders created our constitutional system, they envisioned a government accountable to the people through elected representatives. What we have today is something very different. A vast administrative state where unelected bureaucrats create, interpret, and enforce rules that have the force of law. This administrative state serves as the enforcement arm for elite economic interests. Consider how it works. Congress passes vague, open-ended legislation. Regulatory agencies then write thousands of pages of complex rules determining how these laws actually function. These rules are influenced heavily by industry lobbyists and the revolving door between regulatory agencies and the industries they regulate. The result? Regulations that appear to serve public interests while actually entrenching incumbent corporate power. Large corporations don't oppose regulation, they help write it. They have the legal departments and compliance staff to navigate complex rules that crush smaller competitors. As one banking CEO famously said after new financial regulations were implemented, "The moat around our business just got wider." Financial regulations created after the 2008 crisis were supposed to end too big to fail. Instead, the largest banks grew even larger while community banks disappeared by the hundreds. Environmental regulations often protect established energy companies while creating insurmountable barriers for innovative newcomers. Healthcare regulations shield insurance companies and hospital chains from competition while doing little to reduce costs for patients. The administrative state operates largely beyond democratic accountability. When was the last time you voted for someone at the FDA, EPA, or SEC? Yet these agencies make decisions that directly impact your daily life: what medications you can access, what products you can buy, how your retirement savings can be invested. Agency heads aren't just unelected, they're often drawn from the very industries they regulate. The revolving door between government agencies and corporate boardrooms ensures that regulators protect industry interests. A financial regulator who antagonizes Wall Street won't find lucrative consulting opportunities after leaving government. A pharmaceutical regulator who delays drug approvals won't be hired by drug companies at seven-figure salaries. Even courts have largely abdicated their responsibility to check administrative power. Under doctrines like Chevron deference, judges routinely defer to agency interpretations of law rather than exercising independent judgment. This creates a system where agencies effectively write laws, enforce those laws, and then judge whether their own actions comply with those laws. This concentration of power in unelected bureaucracies undermines both democratic governance and economic opportunity. It replaces the rule of law with rule by regulatory fiat. And it ensures that those with connections and resources can navigate or shape the regulatory environment, while ordinary Americans and small businesses are left to comply with rules they had no role in creating. Since the 2008 financial crisis, central banks around the world have engaged in the most radical monetary experiment in human history. Through near-zero interest rates and massive asset purchases, they've created trillions in new currency and fundamentally altered economic incentives throughout society. But who benefits from this experiment, and who pays the price? The first beneficiaries are governments themselves. When central banks buy government bonds, they artificially suppress interest rates, allowing governments to borrow unprecedented sums. Politicians love this arrangement. It allows them to spend without raising taxes or making difficult budgetary choices. But it creates a debt trap for future generations who must eventually bear this burden. Financial asset holders, predominantly the wealthy, receive an enormous windfall. When central banks pump money into financial markets, asset prices surge. Stock markets reach record highs not because of economic fundamentals, but because of monetary stimulus. Real estate in elite areas skyrockets in value. The wealth gap widens as those who own assets get richer while those who don't fall further behind. Meanwhile, savers are punished. Retirees who worked and saved responsibly find themselves unable to generate safe income from their nest eggs. Pension funds face shortfalls. Young families struggle to save for down payments as housing prices outpace their ability to save. Insurance companies charge higher premiums because they can't generate returns on their reserves. Central bank policies also drive dangerous risk-taking throughout the economy. When safe investments yield nothing, investors chase yield in increasingly speculative assets. Zombie companies and profitable enterprises that should fail in a normal market survive on cheap debt. Resources that should flow to productive enterprises instead prop up the dying and the speculative. The inflationary effects of monetary expansion hit hardest those with the least financial sophistication. While the wealthy can hedge against inflation through assets, working Americans watch their purchasing power erode. Inflation is the most regressive tax of all. It doesn't arrive as a bill in the mail, but it silently drains value from your paycheck and savings. Perhaps most concerning is how central bank policies have created addiction. The entire financial system now depends on continued monetary stimulus. Any attempt to return to normal monetary policy triggers market tantrums that threaten economic stability. Central bankers know this, which is why they repeatedly back down from normalization efforts. We've created a system where private gains are supported by socialized risks. Banks and investment firms reap profits during the good times, secure in the knowledge that central banks will rescue markets when things turn south. This isn't capitalism. It's a form of financial feudalism where the connected are protected from consequences while ordinary citizens bear the costs. The end game of this experiment remains unknown, but history suggests it won't end well. No society has ever printed its way to prosperity. The laws of economics, like the laws of physics, cannot be repealed by central bank decree. The bill always comes due eventually. In a digital economy, access to the financial system isn't just a convenience. It's a necessity for participation in modern life. Increasingly, this access is being weaponized against individuals and businesses that challenge prevailing narratives or powerful interests. Banks, payment processors, and financial services companies now routinely deny service to legal businesses and individuals based on political considerations rather than financial risk. Gun shops, cryptocurrency companies, adult content creators, conservative nonprofits, and others have found themselves suddenly cut off from banking services despite perfect legal and financial standing. This financial deplatforming occurs without due process or appeal. Private companies make these decisions with no transparency or accountability. The targets often receive no explanation beyond vague references to reputational risk or terms of service violations. Without warning, businesses built over decades can find themselves unable to process payments, maintain accounts, or access loans. Operation Choke Point, a government program that pressured banks to cut off services to legal but disfavored industries, officially ended years ago. But its spirit lives on through informal regulatory pressure and corporate virtue signaling. Regulators don't need to issue direct orders when a raised eyebrow communicates the same message to banking executives concerned about their next approval or examination. The threat extends beyond traditional banking. Major credit card companies, payment processors, and fundraising platforms have all participated in this new form of financial censorship. When multiple financial services companies act in concert, the targeted individuals or businesses have no recourse in a digital economy that requires electronic payment processing. Even more concerning is the development of central bank digital currencies, CBDCs. Unlike decentralized cryptocurrencies, CBDCs would give central authorities unprecedented visibility into every transaction you make. They could be programmed with restrictions on what you can buy, when you can spend, and even whether funds can be accessed based on your social or political standing. China's social credit system offers a glimpse of this dystopian future, where financial access depends on government-approved behavior. Western financial institutions are developing similar capabilities, often justified by environmental or social governance concerns. The power to monitor, approve, or deny every transaction represents a level of control that would make traditional censorship seem primitive by comparison. We're witnessing the birth of a new kind of social control, not through direct government coercion, but through the outsourcing of censorship to private financial intermediaries. This system is more insidious than traditional censorship because it operates in the shadows, without formal laws or visible enforcement actions. It silences not through jail cells, but through the quiet denial of economic participation. The weaponization of financial access represents perhaps the greatest threat to freedom of speech and association in our time. A society where your ability to earn a living, run a business, or even buy groceries depends on conformity to approved viewpoints is not a free society, regardless of whether the restrictions come from government decrees or corporate policies. Throughout this presentation, we've exposed how a small elite controls the economic system that governs our daily lives. The picture I've painted isn't meant to discourage you, but to empower you with knowledge. Because despite the overwhelming advantages wielded by the financial elite, there are paths forward to reclaim our economic sovereignty. First, we must recognize that these problems transcend the traditional left-right political divide. Both major parties have been compromised by the same financial interests. The solution won't come from supporting Team Red or Team Blue, but from a fundamental realignment that puts the interests of working Americans ahead of global financial elites. Second, we need to rebuild local economies and reduce dependence on distant, unaccountable institutions. Support local businesses instead of multinational corporations. Bank with community institutions instead of Wall Street giants. Build resilient local food systems instead of relying on global supply chains. Economic relocalization isn't just good for communities. It's a form of resistance against centralized control. Third, protect yourself financially. Physical assets outside the banking system provide some insulation from financial surveillance and monetary manipulation. Precious metals, productive land, practical skills, and strong community relationships retain value regardless of what happens to digital assets or fiat currencies. Fourth, demand transparency from public institutions. The Federal Reserve, Treasury Department, and regulatory agencies operate largely in shadows. Their operations should be subject to complete public audit and genuine democratic oversight. No institution with so much power over our lives should be exempt from public scrutiny. Fifth, support political candidates who demonstrate genuine independence from financial interests. This transcends party lines. The politician who refuses corporate PAC money, speaks honestly about the corruption of the system, and proposes specific reforms to decentralize economic power deserves consideration regardless of party affiliation. Sixth, develop alternatives to compromised systems. Cryptocurrencies, local currencies, time banking, and other innovations offer potential paths forward. While none is perfect, they represent important experiments in creating financial systems that serve communities rather than extracting from them. Seventh, and perhaps most important, spread this knowledge. The system I've described relies on complexity and obscurity. It functions best when people don't understand how it works. Simply sharing this information, helping your friends and family understand the true nature of our economic system, is a revolutionary act. Throughout American history, ordinary citizens have repeatedly risen up against entrenched financial power. From Andrew Jackson's battle against the Second Bank of the United States to the populist movement of the 1890s to the trust-busting of the Progressive Era, Americans have successfully challenged concentrated economic power before. We can do it again. The elites want you to believe that the current system is inevitable, that there's no alternative to their preferred economic arrangement. This is a lie. Different economic systems are possible. Throughout history, they've existed. What has been built can be reformed or replaced. What matters is having the courage to imagine something better and the determination to make it real. Thank you for joining me today. If this information resonated with you, share it widely. The first step toward change is awakening to the nature of the system we live under. The next step belongs to all of us. Good night and God bless America.